Hey everybody, welcome to the garden. I hope you're having a great day. Shout out to the lemon and lime lovers and everybody in between. It's time for the market recap. And remember, if you're interested in any of the services I provide, please make sure to check out those links in the description below for both the Patreon and Discord. And quick reminder, if you are in the Discord and you are not participating in the swing trade free trial service that's been going on for the entire month of November, I implore you to start looking into it as the free trial ends at the end of this month. And if you are interested in the service, this is your best chance to get to use it for free. That way you can be sure that you want to pay for it going forward, okay? All right, everyone, let's hop into the market, see what we're looking at. So starting off with the dollar, and the dollar is doing pretty much as I expected it would. So, over the last couple of recaps, what have I said is likely to happen? We came to this blue zone and we started painting out a structure that wasn't ultimately that bearish. We were holding this general zone, and then we have found that move back into this fair value gap right here. And potentially we're going to have an extended move towards the top zone, the top of the blue zone, and towards this fair value gap a little bit higher up, which pretty much tests the very bottom of this bullish structure we broke bearish. All right, so having that continued rise up into the dollar is not unexpected. It's what we saw that was likely to happen. And yes, it is leading to some pain in crypto, but as we'll get to Bitcoin, I'll explain exactly what's happening, because I have mentioned to watch out for this scenario, which was the most probable path that Bitcoin was going to go on that we're currently walking right now. So dollar making its move up. Look for it to potentially start to slow down here, but if we do have that extended move up towards this higher fair value gap, watch for it to get towards 109, and then we should start seeing at least some selling coming back down towards 108 and potentially a little bit lower. Okay, now let's take a look at the Dow, S&P, and Nasdaq. And looking at the Dow makes me feel like, wow, what I am seeing in the Dow it makes me feel like the rise in the dollar will be short-lived. Okay, we may still have some more upside in the dollar, but the Dow looks quite bullish. Okay, so we've tapped into this lower fair value gap a couple times, and now over throughout today and how we closed on Friday, depending on how we close this candle, this isn't looking that bearish at all. Now, this doesn't mean this bullish consolidation that we're potentially looking at here is done consolidating. We may need more candles to print, but overall, this is quite bullish. Okay, we had the massive rise, broke this descending trend line, came back into the fair value gap, and so far is having a bullish consolidation above it. Now, if the dollar does continue to get stronger and we do start breaching past, let's say 109, watch for the Dow to break under this fair value gap and probably retrace all the way back down to this trend line it broke. Okay, it's still very bullish as long as it holds this descending trend line, and really it's extremely bullish if we get to hold these lows that it made right here. All right, so let's go on to the S&P next. S&P is also having a fairly decent consolidation as well, kind of grinding down into the fair value gap level, kind of ping-ponging between these fair value gaps, right? So this is what you do want to see if you want a nice strong bullish consolidation, grinding a little lower, coming into a support zone. That is definitely what you want to see. So as long as the S&P doesn't have too strong a trending move down to where pretty much takes out this entire bullish candle here, we look gold. Okay, we look very, very good for that continuation higher, but we may have to go through a couple days this week of some downside or some sideways action. We don't have any major news until I want to say the 23rd. It's either 23rd or 24th. I'll have to double check when the initial jobless claims numbers come out. So that will also push the markets in one direction or the other. So as long as those numbers aren't absolutely abysmal and the markets don't take them too badly, we should see a continuation of this bullish consolidation, and the probabilities will be on our side for a rise up, which will probably lead to a weakening dollar. Next is the Nasdaq. So Nasdaq fighting at this descending trend line, which is the top trend line of the descending channel. This is one of the reasons why I ended up taking that that short ETF on the NASDAQ. Not that I think the NASDAQ is done going up. I do think that we are going to continue to see this bullish retracement, because this is more of a bullish retracement rather than consolidation. We'll see how this candle closes and how pretty much Tuesday and Wednesday kind of trade out, but we're coming into this bullish fair value gap. I do see the NASDAQ coming down into these levels and probably holding as long as the dollar doesn't get overly strong or too strong too quickly, right? So as long as that happens and we have this nice bullish retracement here, we should find the fuel to decisively break outside of this ascending channel to then come and test eventually the higher green zone up here. So I'm liking what I'm seeing. This looks quite healthy, but again, we have to give this some time to still develop. We're not done developing in both crypto and stocks, but crypto is playing out. Most of the cryptos are playing out the structures they've been building. Again, we'll get to that once we get to Bitcoin. Now looking at the oil chart. So oil, very, very interesting. A lot of fun has been being played today. I mean, we had news come out where we had a nice drop today, and then we had a nice buy up off of false news. So false news, or I should say allegedly false news, came out where the OPEC, Saudi Arabia, was going to pretty much up their production of oil. So there was going to be a bigger supply of oil, but then sometime later today, the Saudis essentially denied that story, saying that's not true. So I do believe that this was probably a long trap, unfortunately. So if it's true that the Saudis really aren't looking to up production, everyone who bought down here off of that news that doesn't seem to be true, we'll probably see continued selling into oil. But isn't it interesting? How cool is it that it came all the way down to just about 75 bucks again, tapped under the liquidity of this swing low, and then zoomed up? It's really, really awesome how you see all the confluence on the chart play out, and then news gets tied to those levels. It's super interesting to watch. But I do think that you're probably going to see oil start trading lower again, eventually breaching just under 75 and probably testing out this descending trend line here. Okay, now let's get into gold and silver. So gold having that bullish retracement, like I said, it probably would, looking to come down towards these high pivots that it broke out from, grab the liquidity above these levels. So if it can hold this fair value gap, that would probably be the most bullish structure it can build. But don't be surprised if you see it retrace all the way back down towards these lower fair value gaps. That too is still bullish as long as these lows down here aren't taken out. But ideally, if you want a strong impulse move still to the upside in gold, you want this higher fair value gap to hold and then build out a bullish structure, whether that's a descending wedge or just a nice curvature that's rounding bottom towards the bottom end of this fair value gap for continuation. You want to hold this fair value gap, but even if it does lose it, we still have to have a bullish bias on gold. Okay, but this is still within the roadmap that was most probable that we had been mapping out all the way down here. All right, next is silver. Silver, respecting the expanding structure still, traded back into it. And if gold continues to retrace, watch for it to come all the way back down into this fair value gap, just like my doodle showed, and eventually coming all the way towards this ascending trend line as well. So I am liking how this is looking, but if gold does start breaking bearish, so let's say it does start losing the lower fair value gap, and it maybe starts testing out or threatening those lows, then watch for this ascending trend line to break on silver, and that's when you can see the really, really low prices into silver. But that's not the most probable path right now. All right, now let's get into Bitcoin. So we'll look at Bitcoin real quick. So I know that Bitcoin is breaking down, which makes sense because this bear flag had matured out enough. I had mentioned in the last recap, this bear flag on Friday had matured enough that if we do break down, it's very probable. So we had to have a bearish bias after losing this consolidation and then building out this bear flag that look for a breakdown. Obviously, we wouldn't want the breakdown. We would have liked to have seen it grind a little bit higher, maybe even break this trend line and get towards this fair value gap before continuation lower. But like I mentioned in that last recap, the bear flag was looking so clean on Bitcoin that it was very likely that we were going to break bearish. That had to be the most probable path, and that's what we're seeing. And this looks like it's validating Okay, now we have this daily candle now testing out these lows. It's very unlikely you'll have this low wick hold. You will probably see Bitcoin start breaching these levels over this week unless the dollar gets really, really, really weak rapidly. Okay, so if the dollar gets really, really weak rapidly, then you may see a nice shoot up. Now, this doesn't mean it bottoms out, but you might just see a nice spike up just based off of the weakness in the dollar. But most likely you'll see as much of the one-to-one move on this bear flag play out. And the one-to-one move, remember I did it, I had measured it out for you, was just under about 10,000. So you're looking at about like 9,100 to 10,000, okay? So that would be the full extension of this bear flag, the one-to-one. So we could see Bitcoin eventually get down there, but it takes time. You know, things don't just move directly to the place their one-to-one extension is, right? So you may see some nice little rises on the way towards that level, and you may actually just see it stream down there. Again, a lot of this we'll have to wait and see how it plays out, because all it takes is another piece of major bad news, another massive exchange, you know, showing that they're insolvent or whatever, and you could see that just waterfall down, or we might just see a slow process over the rest of this year coming down. In my opinion, we'll probably break down some, and then we'll probably come right back on up, test out the level again around 15,000, 16,000, and then break down again. Okay, we have to just give this some time, but it's unlikely we waterfall down without any massive news. All right, I don't see that happening right now. There is some news percolating out there that Gemini, that exchange, might be under some risk. We'll have to let that mature. You know, we don't want to jump the gun on things, but what we can see in the charts and what we have to make our decisions by is expect lower, watch for around 14,000. There will be demand around that level. So you'll see Bitcoin trade around 14 to 12,000. This whole zone here will have a ton of demand, and we should have enough demand down there, enough bids to where we do get a rise. Now, how big the rise, it will depend on how the price action looks and the environment at the time, but I would look for just another lower high. Okay, like, I'm not saying we're gonna go down there and then we're gonna boom up, not calling for that at all, more as I would look for another lower high. And this is why I always stress, don't go into positions at 100%. I've said it almost every video I've done since I've started this. You have to break up your positions, because you can then participate when price goes against you. Right? You're not just sitting around watching your money bleed away. You're participating. And that's why I'm in this Bitcoin long, and I'm very comfortable because I have money on the side to add on to the position. Okay, because now I know the level I want to target is around 14 to 12,000. You know, ideally around 12,000 on the dot. So if it gets down there, I can add on to my position, and on the expected rise, because the probabilities will be on my side that there will be a rise that brews from this zone, I could potentially get back into profit or near break even and make my decision with a lot less money at risk. Okay, that I don't know how many times I have to say it, but that's the reason why. It's not about making more money, it's about protecting your money. You have to get in the habit of protecting your money so you survive. And if you survive, you will be able to take on opportunities as they come. If you die in these markets, if your account dies, even if there is opportunity, guess what? You can't do anything. You don't have any capital. So you gotta get in the habit of thinking about protecting your capital. Making money will then come naturally. Okay. All right, everyone. That is it for the market recap. Remember, if you have any questions, make sure to ask me in the Discord. I try to answer as best I can. And if you're interested in those services, check out the links in the description below. I try to be as, in the Patreon at least, I try to explain exactly the services you're getting in the best detail I can. And if you're not partaking in the free trial, try. I would do it, especially now we're about 2 weeks left in the free trial here. So, all right, everyone, remember, be patient, be vigilant, and be nimble. I love you guys. Take care. Bye.